Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 15th. Hey, we got a bit of economic news release to go over today, so we'll jump right into it. So today we'll start off with the Consumer Price Index, or also known as the CPI. We had a 0.2% increase in the month of October, and basically it came in expectations at zero, so a flat line. But when you strip out the food and energy, the more which creates the volatility in there, we have what they call the core CPI, and this is more what the Fed will look at. CPI is an important gauge. So this is one of the inflation numbers that we look at for consumer level, but the more important one, what the Fed looks at, is the PCE, which is the personal consumption expenditure, which has not been brought out yet, but the CPI definitely is one to watch as well. So as you can see, we had another 0.2% increase. So in October we had a 0.2% increase. Forecast was a 0.2, and it came in expectations. So we are starting to see a little inflation picking up a little bit in terms of where the economy is going. So tomorrow with the Fed, with the meeting starting today, may make it more relevant to start raising rates tomorrow. So that might be a good sign that the Fed does go ahead and start raising rates before inflation does get into maybe controlled, out of control. Now, if you look at the core CPI right now, year over year, it's at 2%, and that's where the Fed target date is. But if you look at the year over year for PCE, it's going at a much slower pace at a 1.3%. So there's a pretty good spread there, 0.7%. And like I said, the Fed does look more at the PCE, but I'm sure they're kind of keeping their eye also on the CPI here. Now, the next item on the docket we have is the Empire State Index. This is manufacturing in the New York region. We had a negative 10.7, which is obviously not good anytime you have a negative in the month of November. So December was supposed to have a negative 7.5, but it came a little bit better at negative 4.6. So still, for the last couple months, we've been seeing some contraction in the in manufacturing in the New York region. Part of that might be the weather and stuff like that this season. And last but not least, we got the Home Builders Index, which shows that it's dropped as well. We had a 62 back in November. We thought it was going to tick up slightly at the 63, and actually took a step backwards to 61. Still same range, but went the opposite direction where the forecasts were. Right now, the stock market's up, and it's taking its actually Q today. Dow's even up about 250 so far in the oil price. So last week we were all kind of watching the oil prices drop. And then today the oil price has kind of been rallying back to about $37 a barrel right now, after being as low as around 35. So this is good. The stock market's liking this, and right now it's kind of taking a nice little rally so far. Bond market on the other hand is taking a beating as a result. So the bond market basically, which means we are at our lowest point we've seen in the last month. So we're kind of hit that rock bottom now. Heading into tomorrow, I think we got room. We'll see some improvement here for bond market. But right now, it looks like we can pretty much hit our bottom, and we have pretty much room to go. Right now, we're down about 16 basis points. So we're at this level here. As you can see, we were further down at one point this morning. And as you can see, we've been kind of at these levels here as well. So these are about the low point, and have a lot of room to go up here. And here's where our next ceiling resistance will be, at the 200-day moving average. So we got a lot of room in between where we are now and the 200-day moving average to show some improvement in our pricing for interest rates. So, and I do think we'll get a rally coming ahead once the Fed does raise rates, because that's a good indicator that the value of the bond will continue to grow over the course of time, and is keeping inflation in check. All right, folks. Hey, you guys have a wonderful day. We'll see you guys tomorrow. Remember, tomorrow will be the big day this week, where the Fed does finish up their meeting and give their announcement, and that will be later in the day, or roughly about 11:15, 11:30 Pacific Standard Time. All right, have a great day. See you tomorrow. Bye.